Hello, and welcome to Masterminds, a podcast where business leaders share practical lessons on scaling up, building strong businesses, and creating lasting success. I am Pramod PB, your host for today. Today, we are joined by one of Australia's top scaling up coaches, Anna Samios. Anna is the CEO of Performance 7, winner of the Australian Women's Small Business Champion Award, Business Coach of the Year, creator of Kcash Cashflow, a practical and transformational framework changing how business owners think about money. Anna has coached hundreds of founders and family business owners, helping them move from busy and broke to paid like a boss. And her mission is simple yet powerful: to remove the financial pressure that quietly steals peace from families, and to teach business owners the money skills that they were never taught. Her book, Kcash Cashflow: How to Build a Cash Rich Business in 30 Days, is an Amazon bestseller across 4 categories. Even before the release of the book, she was interviewed by the New York Public Library. That's amazing, right? And we are truly excited to have you with us today, Anna, and welcome to the show.
Thank you. Very excited to be here, and thanks for inviting me. What a great intro. Thank you. I'm a bit shy now.
Yeah. Thank you. And I know, before delving into the deep side of Kcash cash flow and the nuances of cash flow, what sparked the creation of Kcash cash flow? I would like to know. I'm very curious to know about it.
Very good question. I think for me, having worked with hundreds of businesses, I've worked with, medium-sized businesses, smaller businesses, and I also work with very large companies. And you tend to see where the gap is. A lot of the smaller businesses, they might be running their bookkeeping internally and trying to work out what's going on. If we're lucky, they have a budget,
Mhm.
and then they're trying to make ends meet. Their reports are very messy, and we're trying to figure out where to scale the business. The other side of the equation is we've got companies that are quite sophisticated with their accounting and their finance teams, and they have cash flow forecasts. They have business analysts that have a look at what's working in their business. So there's a real divide, there's a real gap between the smaller businesses and the medium-sized businesses trying to navigate their cash flow, and the big end of town, which actually has that bench strength. So I've worked with so many businesses, and it breaks my heart when I see them working really, really hard and they just can't see what they're doing wrong. So I wrote the book to kind of break down those barriers and try and make it a little bit clearer for those who want to grow their business and want to scale, and what are the tools and what are the steps that they need to take to get them to that next level of growth.
That's really great. I have, in fact, gone through your book, and I must say it is beautifully written with so much credible stories. And one
Thank
of the
you.
things that caught my attention is you talked about the mental health of founders or owners when it comes to cash flow pressure. Can you just explain a little bit with the help of some of the stories that you have experienced or you have seen?
Yeah. So probably my own story is a good one. Like my husband and I, we set up our first business when I was 25 years old. And the first 3 years of running our business were some of the darkest days of our lives. We had never worked so hard. And yes, we were profitable. We were always profitable, but we didn't have the cash flow to support it. And back in the days when Peter and I were running our business, we had an accounting firm, which was quite interesting if you think about it. But back in the days when we were running it, it was traditional for invoices for services to go out at the end of 30 days and then at the end of the month and then get paid in 30 days. Everything was in checks. There was no electronic transfers back then. So cash flow was a real issue. And when you're young and you're starting out your business, and I think a lot of people can relate to this, is you're working hard, but you look at your bank account and there's two different stories being told, and you start to doubt yourself. You start to think, well, what am I doing wrong? How come everybody else is so successful? What am I doing? Why don't we have any money? We keep chasing sales. Like there's this phenomenon, with a lot of the stories going out there, especially on social media, about building sales, and sales will help you. We know that sales is the dumbest number you can
Yes.
follow, really.
Yes.
You
Yes.
know, how do you get really profitable work and get the cash flow timing right? And when you have cash flow, all of a sudden you get to breathe, your shoulders lift, and you know the impact that it has on your self-talk is to be noted. So when your cash flow is tight, you start second guessing yourself, and your team starts second guessing themselves too. When your cash flow is booming, happy days, you know, we pretty much feel invincible. So there is a direct link with mental health strategy. And I think from a mental health perspective, it's all to do with the self-talk and the confidence that having cash flow brings you.
I'm sure about it. Yes. And what does it look like in real life? No spreadsheets, no theory, and day to day living. I'm talking about the life of a founder on a day to day basis. Once the cash flow is, that story is right. What do you think? How it is going to make an impact more than mental health? Which are the areas which can be positively impacted with straightening the cash flow or making the story right?
I think once you've got lots of cash in your coffers and you've proven that your business model or your what you sell into the market, you've achieved what we refer to as product market fit, you become really, really confident and you can start looking for other opportunities. It also allows you to innovate
Okay.
and you know the innovation engine where you can actually put away 20 you know $1,000 or $10,000 and you can see another opportunity in the marketplace and where you can invest in a new idea or maybe invest in another product. So being able to innovate within your business is a real advantage. The other advantage I see is that especially when we've got a lot of family businesses in Australia.
Hmm.
And, you know, they're not small businesses. They're quite often
Okay.
quite sophisticated, large, as you do in your homeland as well.
Hmm.
You know, we're multi-generational. And I think when cash flow is strong, the kitchen table and the family table conversation is a lot
Yes.
happier and joyous. And when cash flow is stressed, there's a lot of friction, sometimes a bit of there's unhappiness at
I
home.
understand.
We don't need that. So I think when you've got the strong cash flow and everybody really understands the impact of their decisions that it's actually having on their cash flow, it ultimately leads to happy homes and happy children because our children are always
Yes.
watching us
Yes.
and how we interact with each other. And I think all round, when you have a cash flow positive business, you also have a cash flow, a happy business, happy
Yes.
life. So
Yes. It not only fixes the business, but it also fixes the family life as well.
well said. Yes, exactly.
But despite being this as one of the most critical element of business, what are the biggest blind spots business owners have about money? Why people are not giving adequate importance to cash flow and cash?
I think most people have never been taught how to do it. And yet
Mhm.
it is a skill that we live by day to day. I think we're all quite comfortable in and having a look at a profit and loss statement and speaking to our accountant about profit and loss and maybe some of our sales targets and I think the heartbreaking thing is a lot of accountants the only advice because they've never really been taught cash flow either. I
Okay.
think at university at best if they've probably run a one lecture on cash flow forecasting, yet it is the blood flow. It's the life force that works throughout the business and we don't pay enough attention to it. So I think businesses quite often chase sales,
Mhm.
thinking that
Mm.
sales will solve more
Correct.
sales will solve everything. But not all sales are equal. So getting actually understanding our trading terms
Mhm.
with our suppliers and also our trading terms with our customers, how soon we can get money in so that we can pay our suppliers and pay our team has a real impact on cash flow too. And it's purely something we've never seen and never been taught at school.
Okay.
And yet it impacts us every day.
But at what stage of business you were an entrepreneur? You started as an entrepreneur, then a scaling up coach, now an author. It brings a lot of credibility in whatever you say. But at what point of time in your life that you realized that cash is the queen? I'm not saying the word king. Cash is the queen. When did you
Well
realize
done.
that one thing?
It's been a theme that's been weaved throughout a lot of the
Mm,
businesses that I work
mm,
with. So having worked with, so many businesses, and I spend a lot of my time in boardrooms.
okay.
My life is in boardrooms having lots of meetings, and you get to see patterns. When you
Mhm,
experience and you talk to so many people, you see some people are winning and some people are really struggling. So what is it happening? What's happening within their dynamics and what's happening in the decisions that they're making? So for me, early on, I noticed that we were very profitable and we had tax to pay, but the cash flow wasn't actually mimicking that and also reflecting the success that we had in our organization. The timing was off.
mhm.
So I think what you observe over time is that there are some decisions that you need to make so that you can negotiate better cash flow.
Okay.
And you get to see this in different organizations all the time. We know that growth sucks cash too. So that, it's a famous saying that growth sucks cash. And it sucks cash because you can want to increase your sales. But if those sales aren't cash flow positive,
Mhm.
in other words, perhaps you take a little bit of a deposit from the customer before you pay your supplier. If
That's a
that
wise
timing is
strategy.
off, when you're a small business, that might
Mhm.
be $1,000. We have dollars in Australia. It might be $1,000 or $10,000. Your credit card can handle it. A bit of an overdraft will handle it.
Yes.
But as your business grows and you have a lot more zeros on your invoices,
Mhm.
and the timing is off, remember, you might be paying a supplier before you're going to get paid by your customer. These are hundreds of thousands, if not millions of dollars that all of a sudden you need to find. So driving more sales, you need to then fund a bigger gap in cash. And that's where businesses grow broke.
Okay. You must be working with a lot of family owned businesses. I could see because most of the stories that you shared in your books are related to family owned business. But this framework or this cash flow saga that you resolved or this tool is applicable to big businesses as well, right?
Yeah, absolutely. Um, the the fundamentals of business are all the same.
The canvas is
And
same. Yes, I understand.
yeah, I think the thing that sometimes strikes people and they get lost in why their business isn't succeeding and why the cash flow isn't right, there's a couple of factors. The first one is that the sales team are driving sales.
Mm, mm.
And I have what's called, I've noticed quite a few CFOs use this term, the sales team have happy ears.
Okay.
As
Okay.
in they say, "We're going to land this sale in January. In January, this customer is going to buy for us." Everybody's confident that that money is going to hit the bank account. So the rest of the team goes, "If sales is booming and sales is so great, can I hire a new admin person? Can I buy this new software? I want to buy a new car." So they go spending. Then the salesperson comes back and says, that sale in January, something happened in that person's life and they're not coming in, the money's not coming in until March.
Hmm.
So sales teams really have to understand that their their decisions of timing of when they're closing their sales and when the money is going to hit has a big flow on effect on the
Absolutely.
organization and puts a lot of stress on the owners because they said, well, we were definitely going to get the money in January. And then
Mm,
all of
mm.
a sudden they've gone and spent all this money and they have a cash crunch. And that's really difficult. So the timing that the sales team actually say the sales have got to land is really
Mm.
important.
Okay.
Obviously, the profitability of a sale is really important. A lot of people just say, oh, you're making millions of dollars. You must be raking it in. But it's not the sale that matters. It's actually the margin dollars, the gross margin dollars
Exactly.
that are
That's my
really,
next
really
question
critical.
because nowadays I hear a lot of founders. See, here in India, it is the age of mushrooming of startups. I think it is the same case with Australia and globally, it's a phenomenon right now. But people, they talk about volumes rather than talking about profitability. So, how do you
Yeah,
distinguish this conundrum? What is most important, whether it is the top line or the bottom line? Which is more important?
very good question. So with startups, if they're externally funded, as in if somebody has given them money to grow the business, they have what we call a runway, a longer cash flow runway. So
Okay.
they can probably drive their expenses for, a little bit harder
Mm-hmm.
for longer until the cash runs out, which is
Mm,
always not a happy day. But for businesses who are self-funded, as in other words, you're growing your own business using your own cash, you have to be mindful of the cash flow forecasting. So one of the things I recommend to businesses, whether you're a startup, highly established, whatever sense of growth, whatever rate of growth you have, you can set up a budget, and we're all comfortable in setting up a budget, but a budget is stagnant. A
mm-hmm.
budget is set, and I can guarantee you by the time you actually pull the trigger on making it go, the budget is already old and obsolete.
Mm-hmm.
As a team and as a leadership team and a CEO, building a muscle of you actually developing a rolling cash flow forecast.
Mm-hmm.
Every Friday, you sit down with your team and you say, for 90 days, what is the cash flow runway looking like? Because I believe God put our eyes on the front of our head because we are moving forward. Yet all
Mm-hmm.
our financial reports are looking backwards. Looking behind us as we're driving our business forward doesn't help us.
Mm-hmm.
So, how do we as a leadership team, whether you're a startup or whether you're established, have that clarity so that you can see into the future what your cash flow is going to do? And then, you can make confident decisions. You can pull back when you have to, or you can play harder when you have to too, because the cash flow is supporting it. So it's
Yes.
a new skill that we need to develop. The big guys do this, the big established companies that they live and breathe cash flow. But the
Mm-hmm.
smaller businesses, and especially when we've never been taught, we've never been told that that's what we really need to build. It's a new skill we need to develop. And that's what the book is all about, is how do you build this new muscle to help you grow? I
And
might
I
add one more
remember,
thing, Ramon.
yeah,
So I wanted to add one more thing. Obviously, I work with a lot of companies that get private equity and get
yes,
investment,
yes.
and some of the businesses exit for incredible amount of money. And I think one thing to note is if you are a profitable business, you will
Mm,
get some kind of valuation. If you are a profitable and cash flow positive business, the multiples are insane
right.
because investors want to invest in a business that's as solid into a business which is a cash producing machine. So
Mm,
for the startup audiences there, I'd really like you to consider, have I got product market fit? Is what I'm selling to the market solving a problem to enough people? And can I position it in such a way that I can be a cash flow positive business? Then you are building a really valuable business.
yeah, that was about clarity on cash flow and clarity on. In the same way, if I ask a question, clarity, it's more about discipline. Some of the family owners, if you look from outside, everything is fine, but the company is broke from inside. There are some stories, I specifically don't remember, but you have discussed it in your book, that the business looks fine from outside, but is drowning inside. Why do such situations happen? Is it because of the lack of discipline, that people forgetting that the money belongs to the company and they are spending it like their own, or they forgot? What is the actual reason for the same?
I think the actual reason is um, their bank accounts aren't structured properly.
Hmm.
So they throw all their money into one bank account and
Mhm.
they see a big bank balance and they think all that money is their own.
Okay, okay,
And it's warning systems. So even for my businesses, I might get paid, but every Friday we transfer funds to accounts to pay the tax, to pay the
okay.
wages. We transfer money out from a cash flow perspective. So whatever is left in that bank account, I know is really my money.
Mhm.
So I think people get confused with, they see lots of money and they see other people driving incredible cars and
Hmm.
the social media with, if I see one more person jumping onto a private jet pretending that they're a millionaire or a billionaire, it's like, it's so heartbreaking. It's silly. It's silly talk. Um, I think they think all their money is there, and then all of a sudden they blow up all
Yes.
the cash, and then
Yeah.
they wonder what's going on.
Got it. You must have trained hundreds of people, right? You must have trained hundreds of people, and currently also you must be having coaches. What is that one small thing that related to this conversation that you tell them to do first when you start coaching family business owners? So what is that first thing that you tell them to do? A small thing. You first tell them you start with this so that your cat story will be right or will be excellent.
Yeah, it's a very good
I
question.
know I'm asking a secret,
Obviously,
but I'm asking a secret, but
no, no, not a secret at all. Like, I'm very abundant with what I've got. Like, there's no point sitting in here. I want to help as many people as I can with what I've got up in my mind. I think one of the things that we work on pretty early on when we're engaging a new customer is actually understanding if their strategy is right. So,
Mm,
how do we work out if the strategy is right? And this is where we start looking at the numbers and we start looking at we know strategy is right if we have strong sales growth. So the graph is
mm.
going up in sales, but we also have the cost of goods, what it costs us to deliver, also going down. So what we refer to in this gap is strategy is right if we have strong top line revenue growth of the right gross margin dollars.
You used
And
a
it's the
specific word for that in your book. What was that?
jaw margin.
Ah, that's it.
We look for the jaws of margin because if our jaws of margin are growing, in other words, for every dollar we sell, we've got lots of cash eventually left
Yes.
behind. This is where cash babies get born. Cash babies get born if we have really profitable products that we're selling or services that we're selling into the marketplace. If the jaws of margin are starting to squeeze, it becomes really hard for the business to make cash. So the profitability or the margin of your products is the first step. Obviously, then the timing of when that profit drops into your bank account is the other piece.
I
I have
really
one
love that
client.
terminology, that shark jaw. It is
Yes,
totally,
that's what I'm going to say.
I can visual that it is easy to remember. Your cost has to go down and your sales should go up so that you will earn enough profit. That's just the beginning to beginning. You are giving this advice to typically to the all the business owners when they make a mistake. But how much time it takes for them to get into practice of the same thing and when the results will be visible?
When will the sales be visible? Is that what you ask? Or the
Yes,
results?
once they focus on the cash, the good practices that you talked about in your book, once they implement, how much time it takes for them to
Oh,
revive their business? I'm
pretty,
imagining that if
pretty.
they are not doing right and you are giving advice, and how much time it will take for them to revive the business.
It depends how deep the hole is before we start working
Hmm.
in with them. But if the business has been comfortable and just plodding along, but the business owner or the family feels it could be doing better, it doesn't take long to turn the ship
Okay.
around. Because I think the biggest advantage established businesses have is that you already have real data. You have true information. You
Okay.
know what the supplier's invoice says because you actually have a copy of it. You know what the customer is likely to pay because you've been out there. You're not relying on Chat GPT or some kind of newspaper article or industry benchmarking to tell you what might be happening. You have real data. And that's so sorry, I'm a bit of a nerd, but that is so exciting because when you ask the question, you just pick up the invoices. You don't need spreadsheets, you don't need anything. Go back to basics like they used to in the olden days, big good old paper invoices. And you look at this is what I paid for 10 of these, and this is what I sold 10 of these for. How do we make that better? How do we make these jaws of margin better? Are we selling it to the right customers? Are
Hmm.
we positioning it right? There's all these wonderful questions that come off actually just looking at the data that's already like it's already within your business. So once you roll up your sleeves and get into it, it doesn't take long, but you've got to look at the real data. You have to look at the right information. Not
Hmm.
unusual to see 30 to 90 days, and it's depends how deep the hole is. Sometimes if the hole is that deep, it takes a bit longer for them to get out of their cash pit. But I think most people embrace it. It's pretty logical when you get to see it, and it's wildly exciting.
Okay. Let's go back to the one of the previous questions where we talked about startups. In today's world, in your book, one of the most contrarian views that you expressed is your stance against discounts. Now we see a lot of discounts happening. We Indians love discounts. Whenever we see discount somewhere, people rush in. But
Yes.
you are deadly against discounts, and you scientifically, mathematically, more correctly, you have explained your views. I just want to hear it from you one more time, that why you are not so favorable to a business building based on discounts.
For us, just as consumers,
Hmm.
we're swimming in advertising, which is talking about discounting. So we think all businesses must discount. So, first of all, there's a mindset thing that we think we have to discount, otherwise, we're not going to win the business.
Hmm.
The thing that happens with sales teams and even with business owners, we think, let's discount it, let's win the customer, and I'll make it up in volume.
Okay.
But what they don't understand is if you want to make it up in volume, you have to work so much harder
Hmm.
to make up the same cash flow as if you had never discounted before. So one
Okay.
of the examples I have in the book, a company was selling a product at a 20% margin, and their sales team wanted to discount just by 10%.
Okay.
But the maths tells us, and you're welcome to go onto kickasscashflow.com and download the table. I've got a working example there. The data tells us if you're at 20% margin and you discount at 10%, you have to sell 67% more volume
Wow.
just to make the same gross margin dollars as if you had never discounted before.
Almost double. Almost double.
Teams have to work so hard. Businesses have to work so hard if they're
Okay.
discounting. I'm not saying there's not a place for discounting, but the decisions have to be made with eyes wide open. Because the minute you're discounting, your jaws of margins go like this. So you
Yes.
have to sell so many more pieces of that just to be left with the same amount of money as if you
Okay.
hadn't discounted before. So finding the right customers, having really great sales conversations, being confident in your product
Hmm.
is really important so
Yes.
that you can keep your jaws of margin
I've seen that even
strong.
the premium products, they never give any discounts, premium products, because they are not concentrating on the volume. They are concentrating on the profitability. They know that their volume may not scale up so fast, but their profitability will not be compromised. That's really a good revelation. And even 10
Because if you
percentage discount means you have to, if you really want to make that loss, then you have to increase it by 67 percentage. That's quite huge. The
volume,
sale has to improve 67 percentage YOY, so that that 10 percentage discount can be matched. That's really. But one
my
more
course,
question. Yes. Yeah.
sorry, my
Please go on.
course has actually got the whole extended table on that because
Okay.
different people have different margins, but
Mm, mm, mm.
it's it's all been calculated. Yeah.
Great.
It's
Some
incredible.
people,
Maths is incredible.
maths is incredible. Yes. And the table, it shows clearly you have given separate scenarios: 10% discount, 20% discount, and 25% discount, how much sales you should increase. And in some cases, if you're offering 20% discount, you have to improve your scale, a sale by more than 100%. Then only you will be able to make up the loss that you created because of this discount. And that's really interesting. But some
Yeah.
people, they say that it's not discount, it is smart pricing. And what is the
Okay.
difference between discounts and smart pricing? I know it's very thin and it is a very technical question, but if you can try explaining that, that would be really great.
I think it's all to do with the positioning in the market. It's
Okay.
how you position your product and your service. And
Hmm.
I don't mind what you want to call it, what people
Hmm.
want to call it, as long as you're going in with eyes wide open and the implications, the impact that it's going to have on your cash flow. That's why the rolling cash flow forecast will actually help you see if we do this, if we discount by this, we think volume it'll be impacted by that much. And this is the impact that it's going to have on our cash flow. At the end of the day, you've got to be fair with your pricing.
Hmm.
I've run businesses for 30 something years now. And whilst some people try and get the quick win,
Okay.
and they sometimes might be greedy in the beginning, the super profits and the super valuations in businesses, especially for software companies in the tech space and in the software space,
Okay.
and any kind of professional service firm, the real money is actually in the lifetime value of the customer.
Mm-hmm.
So how do you be fair? You've got to be fair in business because you're not in there just for a quick win, etc. You're there to find a good working relationship with lovely customers who love your
Okay.
product on service and will stay with you for years. That's cash flow nirvana and cash
Mm-hmm.
flow profitability. So my husband and I have always been of the opinion, just be fair.
Mm-hmm.
Not too much, not too little. The customer has to win. We also have to be okay as well. Otherwise, our business won't exist.
Okay. It's more about customer acquisition strategies where you can give a little bit of discount and grab the market. Then you think about and work on your cash flow. That's what you meant.
As long as cash flow can sustain it.
Okay, okay. Again, it's important. Like I've seen at some companies, they totally ignore the profitability. They only focus on customer acquisition. They give a lot of discounts, then they get a lot of customers. But the moment they focus on the cash flow, they lose their customers because they have built their business on wrong fundamentals. So that means
Yes, very good
they
point.
have to focus on the right thing, that is the cash flow from the very beginning, so that big companies can be built or the scaling up can happen, right?
You also need to price it in such a way that
Hmm.
you can actually deliver a fantastic customer experience.
Okay.
How does your customer win? If your customer wins, you win by
Hmm.
definition. Your customer succeeds, your business will succeed. So when you're pricing it, how do you price it in such a way that you can have enough profitability so that you can hire the great people to provide a great service? You can actually provide like a fantastic kind of product, quality of product can be
Hmm.
maintained. These are all decisions that we've got to make. They're all choices we make when we're in business. But we know the ones who succeed are the ones who are looking at lifetime value and looking for long term relationships, not just that quick win kind of fancy take all hostages at any kind of cost. Win any customer at any cost. That's just that's short term thinking.
Okay, okay. You must have worked with thousands of customers already. But how many of the founders or the business owners are really aware about the finance side of things, or the cash flow side of the business, or the finance side of the business? Because I've seen that if they have a full-time CFO, they entrust everything with the CFO or the accountant. They don't look at that side. They are mainly focused on sales and marketing and all. They tend to ignore the side of this finance side. How do you look at this? And have you seen anybody who is really successful because he or she has a proper understanding and awareness about cash?
A very good question. It's interesting in Australia, and you probably have it at home as well. I tend to find there's a phenomenon where the husband might set up the business, but the wife is looking after the bookkeeping. And that happens a lot in Australia.
Mhm.
So the wife is, or the partner is really looking at a lot of the finances and trying to make ends meet and,
Mhm.
and juggle that. So we have that kind of thing where one's out there winning the business and the other one's actually keeping the home fires burning and making sure that the accounts are all right. So one of the
Mhm.
family business owners actually knows the numbers.
Okay.
The other side is the ones they can exhale. In
Mhm.
other words, they confidently run their business and they confidently make great decisions. And these are CEOs of very large privately held businesses and family owned businesses.
Mhm.
They know their numbers. And they have a very strong finance team or people who can answer a lot of their questions. They're very competent because your accounting team pays your team. It looks after your family. So being able to be confident and rely on the information they provide you is really interesting. So they know the numbers. It's a skill that you build over time, but they definitely know their numbers. In the book, I've actually written a chapter there's a gap between the smaller businesses or, the mid-market businesses and the big businesses. And there's a real gap in what these two finance or accounting functions do. So in the book, in one of the chapters, I've actually got a checklist
Okay.
where
Okay.
all family businesses and even startups, all businesses can go through it and look at all the things that a big end of town CFO would look at, and kind of the questions that these CEOs will ask of their accounting team to make sure that they're making the right kind of cash flow decisions. It's all there in the book.
Okay. But this checklist is uniform for all businesses, or it is customizable for different type of business. For example, it may not be same for service and manufacturing industry. The checklist cannot be the same, because in one business it is capital intensive, the second it's labor intensive. So can it be the same, or it is a framework that you have designed and it is customizable for the clients?
When I wrote the book specifically so that the business model has to be sound. And what I
Hmm.
mean by that is whether it's manufacturing or professional services or retail, there are some fundamentals, the business being healthy in its own to generate cash. I haven't gone into financing of equipment. I haven't gone into taking outside investment, etc. I've just gone back to the core of the business being a healthy business.
Hmm.
The only real difference between a manufacturing business and, say, a services firm, somebody
Hmm.
who's selling their time, is a concept of inventory or stock.
Yes.
Like a manufacturing business will have stock on the shelf and they have to order, etc. And a
Hmm.
lot of service firms will say, Anna, you don't understand. We're a service firm. We don't have stock. And I'm here to tell you, you do have stock.
Okay.
Your work in progress, unbilled work, is your stock, because money has been going out of your bank account paying
Hmm.
wages and salary for work that you still haven't invoiced. So your work in progress is your stock in a way. It just hasn't been realized. So work in progress and your utilization rates, as in how productive is
Hmm.
your labor, is your team, is something service firms have to look at too. Yeah, the fundament that we call them different things in accounting, but the fundamentals are the same. You've bought labor or you've
Hmm.
bought stock so that you can on sell it. The concepts there, the timing, it
Yeah,
comes
I
into it
understand.
again.
It's the receivable, payable, and the whole cash cycle has to be clear up to the founders, the owners, and all. And that's all about awareness. Awareness alone will not win you the game. You have to do two, three things apart from awareness to create a good cash flow. One is clarity, second is discipline, the third one is awareness. Is there anything that a business owner must adhere to so that he can be a successful entrepreneur?
I think allocating one person within the business to be the chapter that I wrote in the book is actually a term called the Cashinator. I called them a Cashinator. So my business has it. My son is actually our business's Cashinator, and
Okay.
he actually is accountable
Hmm.
to make sure that our pricing is right, our invoicing is correct, our debtors are collected correctly, that he has a look at, whether we're spending on silly things and silly expenses, all about preserving cash. So I think there's one thing that every business owner could do, whether it's the wife or the husband or a cousin or someone who's doing the accounting or an external accounting firm, somebody who's looking after your books, that cashinator role of someone focusing on the cash flow in the business is really quite powerful and will help you uncover a lot of the pain that sometimes a lot of businesses suffer from if they don't get those things right within
Okay.
their business.
And but you said that typically in Australia, the wife is in charge of the finance. The husband would be looking after the sales and marketing side of the business. But we work in different departments, different verticals, I would say. The process accountability spans across various departments. But this cash awareness, do you think we really need to incultivate this cash awareness, or the awareness about the importance of cash? It should be given or inculcated among all the teams, across the team, so that it will be tight, or it is a bad practice to give information about the cash to other verticals, because there are two views. And some people say that everybody should be aware about the cash flow, and some say that no, only those people who are dealing with the cash should be aware about it. What is the right thing according to you?
I think the right thing is the business owner makes the decision that they're comfortable with about how much of their finances they share with
Hmm.
their team. They know their team and they know their industry better than anything else.
Okay.
Having said that, though, especially in the leadership team, in your leadership team, um, anybody who makes a decision
Mhm.
needs to understand the impact their decision is having on the cash flow.
Okay.
We've got companies that are scaling quite rapidly, and the sales team and the stock team think, oh, we're growing, we've got to order, we've got to do things, but they don't actually just trying to meet the customer demand. But you have to actually temper it, you have to balance it with what the cash flow can actually handle. Ultimately, this is where you can only see that if you're doing a rolling cash flow forecast. You can't do it from the traditional reports that we're given,
Mhm.
profit and losses and balance sheets. You need a rolling cash flow forecast. Once you have that, leadership teams will go, you can say, I can't order that stock now because, and they think you're just being annoying. But when they see it on the cash flow, they say, boss, I get it. I understand what's going on.
Mm-mm.
And then they can understand and respect your decisions a little bit better. But if they can't see it on a spreadsheet and they're almost like flying blind, it does create tension because they think you're doing things just to annoy them.
Good. When you said this, some of the companies they create a budget for them for the next year
Yes.
with all the numbers, but most probably they don't stick on to this budget. In between, they go here and there, and at the end of the year, when they compare what they originally created and with the one that actually achieved, there could be a lot of difference. Do you have any suggestions for our listeners to stick on to the budget so that this discipline will help them set the cash flow right, and it is going to have a very long lasting positive result in the business as an advice?
Yeah, yeah. I think budgets kind of formed out of large organizations, multinationals, etc., where the finance team can forecast. Typically, in my experience, the accounting team will say, here's the budget, here's the spreadsheet, 10% growth should be right. And for some reason, 10% growth is their magical spreadsheet number, and that's what they forecast on. Budgets are obsolete, like I mentioned before they even hit the first of the month.
Mhm. Yes.
And this is this new muscle that I'm inviting all businesses and leaders to develop. You will have the budget as a baseline, but then you have to make it an alive document. And this is the rolling 90-day cash flow forecast
Mhm.
because your business is alive. Things
Okay.
happen to us. People leave, COVID hits. Heaven knows what else happens on this planet. Supply chains get impacted, etc. Things that happen in our business we could never have imagined when we set a budget.
Mhm.
Budgets are stagnant. They're a starting point, they're stagnant. Rolling cash flow forecasts are alive. And once your team come in, they say, yes, that sale will land in January. Yes, I need to buy that stock in February. Yes, I need to hire that extra person in March.
Mhm.
You can it's a live document just like your business is, and it helps us really make great decisions. So budgets are just the starting point. It's not the end.
Okay.
Your business
So
is alive.
okay, and I think we spoke for about 45 minutes. It was really interesting to listen to your observations. But I just want you, what is that one message you'd like to leave with the listeners so that as a final closing remark from your sides, my listeners who are feeling pressure around the cash flow right now, what is that one thing that you want to leave with our listeners in an elaborate way? Yeah, please.
Business is simple. We don't need to make it as hard as we do. Don't take advice from people who have never run a cash flow positive business. Be careful who you ask advice of. Be careful
Yes.
what you read. Be careful who you listen to, and make sure you surround yourself with the right people. And then you make your strong decisions. Business is simple. It's a maths formula. Money in, money out. Don't get complicated with all the other stuff. Money in, money out. Get back to the simples that your gut is telling you what needs to be done and what's right and wrong. And I wish you all the best. Anyone who has set up a business, it takes guts. And I really wish everyone all the best. And I hope my book can help at least one person. I'll be very, very happy.
Thank you so much. Thank you so much. In fact, I've been a banker for the last 20 years, and I've never seen a book written on cash flow.
Yeah.
This is the first time that I am seeing a full-fledged book that is written on cash flow and which is really useful. Why? Because you have a lot of credible stories. A person, you rightly said, you are a person with 20 years, 25 years of experience as an entrepreneur because you have seen cash flow. You have gone through the horrible phase, the terrible phase, the happy phase. So you have gone through all these, and that is how you build credibility through these stories, and it is really good. And I'm sure that the listeners, the thousands of people who are listening to this podcast, definitely will be benefited from this book. And I'm sure that I have read it. It is really amazing. And I would recommend to a lot of other people to read this. This is a must read for all the business owners to have this in their library. So that they can use it as a reference book whenever they are stuck with the cash flow conundrum. And thank you so much for joining with us today, and wish you all the best, and waiting for the next book from your side. I'm sure that you would be working on it something, hoping to see
Thank
it
you.
so soon. Thank you so
Thank
much.
you very much. Good luck, everyone, and blessings to everyone. Go for it. Go for it.